Hey team, very good morning. I hope you're doing well. Hey, let's add Boris in the chat. Hey Boris, very good morning, my friend. How you doing? All right?
Morning.
Morning, my friend. Thank you very much for joining. All right, guys.
Yeah, sure.
I know it's early, but as I said yesterday, I think we could take some good steps in a very good direction if we start to incorporate some early calls here and there. Definitely to give us that plan, that basis, a good solid plan to start the day, and you guys are all able to have a look before London session opens. So. I'll get straight to it. It's exciting charts that I can see straight away. I am already focusing on AUD US dollar, but I do want to have a bit of a reason to short by way of the DXY. But what I'm seeing of late, the DXY and AU, they're not really as synchronized as they used to be. Just out of experience over the last couple of weeks, even months, to be honest, sometimes they're actually moving in the same direction, which is quite unusual. So nevertheless, we'll take DXY as a separate entity, as we always do, use those across the crosspairs. But what we will do in terms of looking at AU for an immediate short, even prior London Open, we'll just have to gain some confidence with AUD US dollar by itself. And then, of course, I listened to Denise yesterday. I've got US dollar 30 at the bottom there, which I'll mark up for live for you guys to have a good look at how I do it. So straight on the top, thank you very much for the motivation last night. Very keen to get going. So DXY, pretty much unchanged from the weekly. As you can see, we're slightly still in that weekly range, not really doing much in terms of bullish engulfings, taking out previous highs or lows to the downside. But what we can see is there is a potential trailing range on that weekly time frame. With that said, then we're somewhere within the middle. So we're down to looking at refining lower time frame points of interest to really gauge where we are on that weekly time frame. With the daily, much of the same. We've had potentially a bit of a clue. As we said, if this wasn't range, we had a lower than market after a low, looking for that lower high for a lower low continuation. Of course, the caveat to that at the moment is the fact that price has broken above that 4-hour 50 MA, potentially respecting it towards the upside. However, if we are in a range and the thought process is correct, can't really rely upon that 4-hour 50 MA because as you can see, based on the 4-hour time frame, it's just going through the center of price action. When we compare that to when we could rely on the 4-hour 50 MA for good example, let's head to the left-hand side. You can see that price broke up, respected it, rejected. We had a gap in the market that, of course, looks as if we've closed below that 4-hour 50 MA, but post that, we closed above and continued to respect it. So then we can see price not doing a lot, break up, break back down, etc., etc. So if our thought process is correct about the range, and I've written here, check for daily range confirmation, potentially is a daily range. So let's have a look to see if we filled the lows of that range. With that said, that would be DXY weakness, which of course, if I'm looking to take an immediate looking short on AU, that in theory should go against my short position if the DXY continues to move short. However, if we then respect that if we respect that 4-hour 50 MA, reject it towards the upside, I can also see there is a bit of a 4-hour order block in the market there. I agree, it is a bit of a pointless 4-hour order block, but with that said, it's an order block nevertheless supported long by the 4-hour 50 MA. If we're looking to reject that, move towards the upside, that would be me looking at taking an AU short position based on US dollar strength. That should then push AU to the downside. So that's what I'm looking at the moment. And if I look to refine this 4-hour order block down, it's telling me that potentially AU might not be ready just yet. But with that said, it doesn't necessarily have to respect the lower time frames on the DXY, but more importantly, what's going to happen in terms of the 4-hour time frame. In my opinion, as you'll see, the 4-hour time frame is pretty much being respected quite nicely in terms of the DXY. So we'll have a look at that, sync that on all time frames. And if we refine that area down, then of course there are a couple of 15-minute order blocks in and around the area. With that said, not really going to want to start forcing a position just yet. For example, if I do this, then the question is, well, you could do that continuously throughout the chart and then look for trades here, there, and everywhere. So really just waiting for a bit of confirmation on the DXY. Are we ready to push towards the upside or continue pushing further lower into this key structure area supported long with that 4-hour 50 MA, and then most certainly I'll be looking for a short position on AU. So that's my thought process at the moment on the DXY. Is a little bit swayed because I'm not sure if we are going to fulfill the lows of the range. I'm not really sure if we're going to respect that 4-hour 50 MA towards the highs. But what we can see in the immediacy in terms of intraday price action on the DXY, have a look at this. Highs, higher lows, higher highs, and lows, higher highs, and lows. Respect the 4-hour 50 MA, respect the 4-hour order book. I'm looking for price to push towards the upside. Of course, with that said, we're trading out of a higher time frame daily order block. So there is a lot of conflict there. But I'm just going to go with the overall what I'm seeing and see if that makes sense on the cross pairs. So nothing in immediacy. It's just one for a nice heads up. I'm looking at AU straight off the bat, and we'll just go into that straight away and look to describe that. So AU, of course, AU, nice looking trading range by way of weekly order blocks to the lows. Of course, the weekly order block is doing the business. It's pushed price out. Potentially, we've already retested that weekly 50 MA for the considerable time, and then we're looking for price to move towards the upside. So that's a given by way of at the lows while we were potentially looking for long positions. However, on the way up, or rather on the way down, what we can see based on the daily time frame, it looks quite clean as well. Of course, we understand this is a leg extension. So of course, after that high, we're expecting price to come back down if I can get the click for the higher low for the higher high continuation. However, intraday perspective, what we have here is quite nice. Lower lows and excuse me, lower high, lower low, potential lower high into an area for potential lower low continuation back into the weekly 50 MA, back into the weekly order block. And in terms of higher time frame analysis, of course, that's going to look nice. And if you were looking at trading this highs, higher lows, you'd be looking for a bit of a turnaround before continuation. It's going to make sense why we'd want to see price move towards the upside, but internally we can understand why initially we'd be looking for price to return back simply as we always look to trade structure on all time frames. We're looking for a break of structure before then looking for price to return, before then looking to take price towards the upside. So in my opinion, this short position here on AU could well be price just refilling that area before prices then looking to continue back towards the upside. So that's all wishful thinking. We understand that. However, what we have on the 4-hour time frame, much to be desired. So we'll have a look in the immediacy why I'm not really going to take any immediate positions, but I do like AU a lot. So I'm looking at price action and structure. And again, intraday perspective, it's clear higher highs and lows, higher highs, higher lows, higher highs, higher lows, higher highs. And we are respecting that 4-hour 50 MA perfectly. Have a look at the difference between this 4-hour 50 MA and the previous 4-hour 50 MA discussed on the DXY. We can rely on that. Price is respecting it beautifully. Price action is above it. However, on the DXY, we just saw how the 4-hour 50 MA was just going through the middle of price action, meaning that can't really rely on it until it's starting to prove itself. So that's my thought process at the moment, thus far on AU. With that said, I'm not seeing of late any clear highs. Just if you bear with me, so we've made a high, let's call it higher low, perhaps for a higher high continuation. But if we say, have a look at this wick to the left-hand side. Look at that for perfection. We haven't, in my opinion, okay, if you're going to be technical, we have to say that this candle has just about closed above the area. However, looking at it in terms of a way to support the short position, I would say that we haven't broken above this area, meaning that we haven't made a clear higher high. What I would love to have seen to support us, let's say a long position, is that we don't have that. Therefore, what we have is an equal high. Potentially here was the first low, taking out price action to the downside. I would have loved to have seen something to support that, i.e. another break of the 4-hour 50 MA to the downside, not so much a rejection towards the upside. So that would have been desirable as well. However, it's very clear for me that on the way down, we've left an order block behind that, yes, we have tapped just here. However, we're not going to trade from a 4-hour order block. Once we refine that area down, we're on to the 15-minute time frame now. And look where we are right up at the highs. Let me make that larger for us all to have a good look. And I've enlarged this 15-minute order block just to give myself a bit more of a chance of potentially getting in that. However, ordinarily, here is the order block up at the highs. So with that said, if I'm expecting AU to push slightly higher towards that 15-minute order block, and if I look to the DXY to gain some confidence, whether or not I am ready to take a short position on AU, as we can see this order block that we just place in on the chart to see if it would make sense is already being smashed towards the downside, we can understand that this could well be the order block just here before looking for the reaction towards the upside. So what I'll do, bring this alert slightly lower and bring this one lower, and let's see if we get a turnaround at this lower time frame order block, which I think would make really good sense. It's kind of an equidistance away on both pairs. So at the moment, I'm seeing good synchronization between the DXY and AU. With that said, what I am willing to do is something like this. If I get a turnaround within the area, then of course I'm going to look to take a short position. The reason for that is if I look towards the upside to see how badly wrong could I be, in my opinion, I'm going to be considerably wrong because my stop loss is never going to be this large. I'm never going to be able to protect these highs. So what I'm going to have to do is simply trust this thought process. If price goes through and heads towards this area, I do believe at this time it would be a risk worth taking. And that's trading. Is that risk worth taking? I'd say so. So just a bit more analysis on AU. Yesterday, or prior to yesterday, I had put some structure points in on the chart that I wanted to see broken because we were up here on AU and I wanted, or where were we on Monday? Yeah, here. We're up here on Monday. We had an order block to the left, which I was really considering an immediate short on AU. However, price pushed towards the upside. And then, of course, we moved towards the downside towards Tuesday. Yeah, it was Tuesday. I'm sorry. So the order block was here. We broke above, and then we moved towards the downside. So I was a little bit annoyed to see that, but annoyed, not sure if that would be the word, because there wouldn't have really been a way for me to get into that position anyway. It's just honesty that when you see price move into the direction that you figured it would go, of course it's annoying, but personally, I don't think I would have gained an entry into that position. Nevertheless, with those structure points now that I had on the way up have clearly been broken now on the way down. So remember what I was saying about when price moves in the direction that you believe it to go, actually that could just be your confirmation before waiting for a much better setup. So if we have a look at 15-minute price action, higher highs, we'll call that the higher low confirmed as a result of that higher high, as we've put here, or as I've put here, key structure point in the market. And then what we can see from the most recent move that I was annoyed about, here's the break of structure, leaving what? An order block left behind. It's pretty much textbook. The only thing that to create a bit more of an icing on the cake for me really is look for that lower time frame break of structure and take that short position. Let me just double check the EMAs. Yeah, daily 50 EMA, perfect. Reject it, continuous rejection. I like the fact we're bullish into the area, expecting a rejection for the day. Of course, the caveat to that, there's 16 and a half hours left of that daily candle. However, if we're making the highs now, potentially we'll make the lows later on, and that should be us getting in the position. So again, it's kind of telling me hold off a little bit. Don't need to be in too much of a hurry. We can understand that the current 4 hour candle is very bullish. However, I've found of late it's better to enter, not necessarily better, but it's definitely a nice confluence to enter when most would be quite fearful. I wouldn't really suggest entering on a bullish candle like that. There's 44 minutes left, so potentially when this bullish candle closes, we're going to close into this 15-minute order block. Of course, the next 4 hour candle is then going to close, and what that's going to do is slightly push down, if I can draw it better. That candle will then open, push down, pull back, potentially create the high, which would be our pullback on the 15-minute, and then we'll look for the short back down to the most restrictive area, which is the 4 hour 50 MA. So I've got a couple of plans in terms of that AU short now, but first and foremost, I want to see the alert go off. I want to have the DXY support my thought process in looking to go long, and then I'll be looking to take that short position. So I'm going to be looking to take that short position. Well, lower time frame break or structure, to be honest, if I get a confluence on the DXY coming out of the area, or if I get a bullish engulfing candle on the DXY, I'm probably going to be looking at taking AU pretty quickly in terms of that short position. But in the most idyllic format, I'll just head straight to the 1 minute now to show you guys exactly what I'm doing often. Where is it? Just here. I'm looking at structure on the 1 minute just as I do on the 15. So I'm looking at what's creating the most recent high in the market, and I'm having that as a key structure point just here. Let me draw that slightly better for you. And there should also be where you see a key structure point more often than not, there's going to be an order block that's going to be supporting that pressure towards the upside. As soon as I see that broken and a pullback, and I'm looking to take that on 1 minute or even the fifth or the five. So that would be your 1 minute order block right up at the highs, lower time frame, and then your 5 minute order book's more than likely going to be slightly larger or just slightly lower down. Then, of course, if you get that bearish engulfing candle to the downside, then what you're going to have is a 15-minute order block that's even larger, like so. And then what I'll be looking to do is as soon as price comes back into any of those order blocks, then I'm going to be looking to take that short position. So that's exactly how I'm willing to take that at the moment, just based on all the confidence that I'm seeing. And yeah, despite it being prior my session, I think it's a trade worth taking. And of course, for you guys that are waking up slightly later, all what you're going to get is more confirmation by way of, let's see, for example, here is a key structure. Well, not a key structure point, but by eyeball, that is a structure point in the market. Of course, by the time most of you guys rewatch this, let's say I've already taken the short position, all you're going to see is a nice break of structure. All you need to do is wait patiently for price to return, just have another lower time frame break of structure and look for that short position down. Of course, the caveat would be the 4 hour 50 MA where price is looking to reject. So just ensure you've got enough range based on your stop loss. So AU usually around 10 to 15 to 20 pips that I would accept on AU. But what I can see here is it doesn't even need that, which is perfect in terms of range down to that 4 hour 50 MA, fill Asia down to those lows, and it's going to look like a really nice trading setup. And with that said, that's even a lovely Asia range position as well. So there's so much confidence to look for that AU short. Even if you're looking for price to come into this 15-minute order block, take a 1 minute break of structure, look for the short position down, closed by Asia. It's just filled with confluence. So I really, really, really like that short position. And sorry to go over it a million times over, but if you're looking at price action and you're seeing something like this on any pair, where you're looking at higher highs and lows, break or structure to the downside, 4 hour order block, refine the area down 15. It's just beautiful. Textbook every time, every time, every time. So that's what I've got on AU at the moment. Going to pay careful and close attention to that. And we'll see how we get on throughout the session. So I hope that makes sense. That's what we've got thus far. So GU, what do we have with G at the moment? So we've got that weekly time frame respecting weekly 15 May towards the upside. That's a good start. With that said, it's a good start because what we can see here, much like described the previous call, higher high, potential higher low for a higher high continuation. Of course, the high probably has come from down these lows. So that, of course, installs risk in the long position already, but we're not just basing our long position on just potentials of a higher high from that higher low, which is guesswork at this time until it's confirmed that we can't really hang our hat on it. But it's down to us to try and take that long position from where we believe the higher low to be. And we're building those confluence areas to support thinking based on the technicals. That's where we believe the higher low is going to be for the higher high, and we'll get into some profits. So we've got the weekly 50 MA supporting that towards the upside. However, the caveat, unfortunately, being the fact that yesterday's daily candle and the prior daily candle, unfortunately, closed below the daily 50 MA. So it's a bit annoying. And then with that said, looking at the 4 hour time frame as well, we don't really have too much range back up to that 4 hour 50 MA. So although I've gone over GU just now, I want to have the contrast between, I want you to see the contrast between a good looking setup with some confluences against the position, i.e. GU, versus a good looking setup with confluences supporting the position, such as AU. So despite the fact that they should move together, now look at that for good confluence. I would perceive to take GU towards the upside. Nevertheless, we're looking at rejection on the DXY to the upside, and I'm looking at a nice supporting short position on AU to the downside. So this is where you need to use your discretion and understand, well, despite, if I go on to finish the analysis, despite this may well look good or okay to good on the higher time frames, we're not really getting the support across the DXY and another confluence pair. Now, I understand AU at the moment can't really be trusted as a confluence pair, but over previous history, before we were trading, AU and GU would often move together. So we have to rely on the historical data. With that said, we can look at this both ways. Let's have a look at the long position, which we're trying to build confluences for, despite the EMAs against us. It's clear for me, before I look to take this position, I don't have any reason to take it just yet. Because if I was to take that position, let's say whenever price came into this 15-minute order block refined from the four, yes, we would have had good reason to take that on Tuesday. Exactly. On Tuesday, the previous candle closed above the daily 50 MA. So we refined that daily order block down. We had this 4 hour order block as well to the lows. We came into that 4 hour order block, and most importantly, we refined that area and came into the 15. However, we always say more often than not, we want to see a change in, let's say, let's just call it a change in character before then looking to take a position in the inverse direction, because we know despite our higher time frame point of interest showing us what we should be looking to do, i.e. go long from a point of interest, intraday perspective is not going to be supporting that initially. So what we would have been looking to do when price came into this area is you could have had an aggressive type of approach, as in structure points on the way down just here, broken towards the upside. Then what you could have had is a 15-minute order block left behind that was incredibly large. Probably would have refined that down to a 5-minute order block, which would have been around about here. And then you would have taken a long position. So there's nothing wrong with that. But actually, what we would have said is we would like to identify some structure points on the 15-minute time frame on the way down for a better looking trade. Once you've identified the low, work your way back, what caused that low by way of lower high, have your area in the market, and then look for price to break that area, leave an order block behind, and off you go. So now price action has developed. Well, it hasn't developed, but it's moved on. We have a clear plan. I can see a clear structure point in the market where price is failing to break above. So for me personally, I don't mind the risk on GU despite the EMAs against. Of course, there is a much better looking position for me personally at the moment by way of AU short. But if I get a nice break towards the upside, there's an order block then left behind as a result of that break, then of course I can consider a potential long position based on my higher time frame points of interest and used as a confluence against the position, i.e., what I'll be writing in my journal is that, for example, despite the position looking okay to good, the daily EMA was against me, and also the 4 hour 50 MA was against me in the short direction. Therefore, what was I looking to do in terms of entry criteria? Because if this is the key structure point here that created the most recent low, let's say for a good example, in order to get the long bias, we would want to see that key structure point broken towards the upside. So what I'm getting at here is this an aggressive trade or is this not an aggressive trade? Regardless of waiting for that break of structure to the upside, it's still an aggressive trade because after a low, we're expecting a lower high for a lower low continuation. That would make sense based on what the DXY is giving us at the moment. However, the way in which I would then look to take this position is because I recognize that once we've broken structure towards the upside of my structure point, this could be the lower high waiting for the lower low to be created. Therefore, I need to do something different here once price gets back. Recognize the difference in my approach with AU shorts compared against what I would now perceive as an okay looking position on GU longs. When price returns back, I am expecting that lower low to be created. So therefore, when price gets back down to this point, I need to see something different. I need to see a bullish engulfing candle that's going to wipe out all this 1 minute structure on the way down. Then at least in my journal, it's all about how is this going to be perceived in your journal. If an investor is going to look at your journal and they want to understand, so how are you risking my money? You need to put it in your journal in a way that you describe the risks that were available and the factors that were supporting your position. So we can say this bullish engulfing candle broke immediate 1 minute structures towards the upside. It then left either a 15-minute or a 5-minute order block to the downside as a result of that break of structure. And then when price came back, had a lower time frame order block that I was happy to take the trade when price returned. With that said, need to look to manage that type of a position, I would say aggressively because it is an aggressive position. However, despite waiting for this entry criteria, we still must understand that all of this price action that we've just described could just be all the price action on the way for price to make that lower low. So it's an okay position, but there are mitigating factors against it. However, I would still look to take that long position despite everything against the position, so long as I get what I've just described. So I hope that makes sense in the difference between a good pair that looks good, such as AU, which is pushing up now, and an okay position, which is pretty much against what we're describing. So that's me for GU longs. In terms of GU shorts, I'm sure you guys can see it. Asia range. I like it. It's a long way away. However, it's more than likely that the Asia lows are going to be filled if AU reacts from that high and the DXY reacts from the low. It's unfortunate, but if price really does break up to this area, I'll be looking for an Asia range short pretty much immediately. 1 minute break of structure and off we go. I won't go too in depth with that because I think Asia lows are going to be filled based on the DXY, based on AU. However, I'll put an alert just up here in case we tap that area without filling Asia, and then I'll look for a potential short position down. With that said, even if Asia is filled, it's not a bad looking position based on what we said. We've had a low in the market created as a result of that move, and looking for price return back to the area that created the low, look for a shift in price action, and look for a short position down. With that said, you'll then have confluences onside based on the 4 hour 50 MA, particularly important based on the daily 50 MA, where we know yesterday's daily candle closed below that daily 50 MA. Therefore, I believe that today's daily candle is going to reject that daily 50 MA, reject the 4 hour 50 MA, and close towards the downside. So the short positions are definitely the favorite. I can understand why I would like to long up to the area in which I can take the short from. So therefore, choose your poison type of thing. If you're going to take the short on AU, I think the short on AU is good. If you're going to take the long position on GU, I think the long position is okay based on what you need to wait in order to guarantee you're not just entering a trade on the lower low creation. So that's what I've got for GU at the moment. We'll head to EU. EU we can use as a nice confluence, perhaps for supporting AU and also looking at the DXY rejection. So where are we at the moment? We're in the middle of nowhere on a weekly time frame. There's not too much for us to talk about, but what I can see now, I've seen it before, just not on the weekly time frame. What I have seen, it's evident on the daily, to be honest, a bit of a daily range. So nothing on the weekly, but on the daily. We're not really doing a lot, are we? Considering what we can have on the daily, beautiful trend, lower lows and highs, lower lows and highs, lower lows and lower highs, daily 50 MA, then we're seeing a bit of sideways movement. So taking a position in the middle of nowhere, as we can see, actually, can I make that make sense? There is a 4 hour order block just here, but if I superimpose this, or just speaking to myself but out loud, if I put that daily range on the market, yes, I don't really want to be placing an order block in the middle of a range. That's pretty much, I like to call it financial suicide because once you've identified a range, I would always suggest just wait for the highs and lows. If you see a position within a range, I personally believe it's better to just leave it and go to another pair where you just don't see the range. You know, if there's a range, the only real position you really want to be in is shorting from the highs and longing from the lows. Anything else in between, you're kind of open to manipulation. To add to that, you're open to manipulation from the highs and lows, but at least in favor of yourself is that at least you have the range on side to trade in the direction of the range. In the middle, it's a bit of neither here nor there. So what we did have, or what I can put in the chart, is this 4 hour order block. It does not mean by any circumstances that I'm looking for a short position from it, but it's there nevertheless. Potentially that can help with confluence with AU and the DXY. So we'll have a look at that. daily 50 MA supporting price towards the downside, we do have room towards that daily 50 MA where we could then expect a reaction short from, as well as that we'll be coming back into that weekly order block. So perhaps we'll breach that 50 MA, move slightly higher. And then as today's Thursday, tomorrow will be Friday. No points for stating the obvious, but then we'll be looking to reject that weekly 50 MA for the week and move price towards the downside. So I like the overall bias. It's just at the moment I can't really, well, I can see clear price action. So that's the only caveat to the fact that it might not be a range, but the daily's going to have to trump the 4 hour, unfortunately. So despite seeing this as highs, potential higher low, creating the higher high, if I look to the left, is it really a higher high, or are we just filling those equal highs, as well as price moving back to the downside? Is this a low, or are we just reacting back from the lows of the range? So for me, I can see that. So therefore, it's very difficult to unsee. Nevertheless, we'll get rid of it for a moment with that in mind and have a look at 15-minute price action only. What's going on in the intraday perspective of that 15-minute time frame? It looks quite nice, I'd have to agree. So if we go to this like so, let's zoom out and we draw it on. Lows, lower highs and lows, lower highs, lower lows, and lower high potentially for that lower low. So for me, this would have been a key structure point in the market that created the most recent low. Why I still think price could actually move towards the downside is because this refined 15-minute order block hasn't been mitigated despite the fact price pushed off from the area. So the fact, what I'm trying to get at is, do I foresee a reason for price to want to move back towards the downside, despite being in the range? Just think about the 15-minute time frame only. Is there a reason for that? Well, if we've now created a high going back to the highs of the range, which is up to this point here, after a high, what are we expecting? A higher low. Would there be reason for price to come back into this area? I'd say so. Of course, that's going to break price action to the downside. But when you're looking at trading a range, for example, can you really rely on intraday perspective in terms of price action? I'd say no. Price just does what it likes to do within the highs and lows of a range. So if price comes back to the downside, I wouldn't say that as a break of structure breaking this area just here. All I would see it as price coming back in to a refined area, looking for a reaction back to the highs of the range. What I'm trying to do is give myself supporting confidence why there could be a reaction from this area, which should then play nicely into the fact that I'd like to take an AU short position. With that said, the fact that I'd be looking at also taking a GU long position and I require a pullback on GU, can I foresee there's a potential pullback on on EU? Well, yeah, we've broken high, so after a high, higher low for a higher high continuation. Do I really think price will come back all this way? I don't. But do I think that there could be a reaction from the DXY from the lows? And do I think there could be a reaction on AU from the highs? Yep. And if I look at GU again, can I foresee that after, or the fact that I'm waiting for a break of structure, after a break, can I foresee a pullback? Yes, I can. So therefore, after a EU making a high, can I foresee a reaction from this point? Yes. Does it mean I need to take a short position on EU, excuse me? No, it doesn't. It's all about trying to anticipate where I'm going to find the reaction from and what pair looks best for me. So, would I trade EU is the question of the day. I wouldn't, to be honest, not at this stage, but I will certainly look to use it as confluence. As you can see, I've got alerts on the chart when price taps into this 15-minute order block. So I can see a position there, but I'm not necessarily going to trade that position. So that's what I have for EU. It looks okay, but based on the fact that I can see a range, I'm not comfortable to trade it. But what I can see with the 15-minute time frame is I can use it as confluence. So I'll skip EU for a moment and then we'll go to GCAD to see what we have. So GCAD, I don't mind GCAD, to be honest. GCAD would be a bit of the wild card. So I'd much prefer to trade GCAD than I would to EU, to be honest. So let's have a look at that GCAD. We've made a high in the market on the weekly. After a high, we're expecting a pullback to create what we'd say as a higher low. This has been drawn on for a while. After a higher low, we'd expect a reaction towards the upside, perhaps. Now, do we have an order block to support where price could well react to in terms of a higher low before the higher high continuation. Well, the only order block available on the weekly time frame is what we've highlighted. So I'm then looking to refine that area down. And of course, we can see this daily order block supported by the daily 50 MA. So with that said, where are we at the moment? We're pretty much in the middle of no man's land. So I'm refining these areas now based on 4 hour time frame only. So what we had on GCAD is what I would say is no real price action for a while. We were clearly trending towards the upside, break below, pull back into an area, break below, order block left behind, didn't break the low. So what I'm seeing right now is not so much a trading range, but I do have a trading range. So if I rephrase that better, not so much a range, but what I do see is a trading range. Certainly from the highs, I see a better trading range, but from the lows, I see an area where price is failing to break below a large 4 hour order block towards the upside. So therefore, what am I looking to take? Potential long positions. However, this isn't rather supported by higher time frame points of interest by way of weekly and daily. So I recognize I could be in the middle of no man's land. As well as that, with the 4 hour 50 MA is not supporting my long bias. We can say that price has broken below the once. We came up, of course, we broke below again, and we tried to then reject. And over the last day, we're rejecting that 4 hour 50 MA to the downside. So can I rely on it at the moment? I'd say so. I'd use it as a confluence usually in fact to manage my position by that 4 hour 50 MA. So with that said, if we then superimpose this order block on all intervals, we're just here. And with that then said, I'd be looking to refine that area down onto the 15-minute time frame by way of 15-minute order block. So if we bring that slightly larger, we can have a look to see how price was reacting. So we had refined area within that 4 hour order block, 15 minute just here. We tapped in, we broke above an area in the market. Not quite. So we didn't do anything. We then respected that 15-minute order block again. And what we then did was we made a high. So here could have been a potential aggressive position. Not sure if I took that. Perhaps I did. Nevertheless, we made a high in the market, taking out areas to the left-hand side. We then pulled back. Unfortunately, we broke the low. However, we respected what? The session low. After that session low, we had a bullish engulfing candle. That was my entry just hit on the bullish engulfing candle a couple of days ago from the session low. We didn't do too much, but we had the reaction from it again. So where are we now? Session lows again. So I'm not prepared at this stage to just wait for a bullish engulfing candle and then wait for the order block that created it and then wait for price to come back to that area to take that long position. I don't think that's enough. What I would like to see, however, is structure points broken because what we can see is that structure points are being created, and at the moment, price is no longer reacting from that session low as we would have loved it to have done previously. We can see the reaction, pullback, less reaction, pullback, less reaction. So what I'm seeing is price clearly stepping down. So what I need to see is some structure points now being broken to support the fact I want to take a long. I absolutely do. I can see the long, but I don't have any right to take it just yet. So what I'm going to do, or what I've done, is put some structure points on the market. And based on these structure points is based on how aggressive you want to be. You can quite clearly see the low in the market was created from this area just here. Therefore, if you're going to wait for that structure point, of course, that's going to be your best type of entry. Nevertheless, even me, it's very unlikely that I'm going to be waiting for that. In fact, I wouldn't be waiting for that to take a position from a session low. I'd be a lot more aggressive naturally, i.e. price comes in bullish engulfing candle, order block, look for the long. However, it hasn't done anything for a while. So therefore, I'm going to be a little bit more restrictive by wait for a structure point to be broken. Then when price action returns, I want to see what happens. Now, when I want to see what happens, I make a very clear plan. Break of structure, come back, bullish engulfing. Once I have that bullish engulfing, then I'll restart the process and I'll be aggressive there. So GCAD, it definitely is on my radar. I would take the long position from that session low again, but I want to see some structure points broken, followed by a bullish engulfing candle, and then I'm just repeating my process of what I always do. Session lows, bullish engulfing candle in terms of the long direction, order block pullback long. It hasn't done anything for a moment, so I want break of structure from the session low, 15-minute bullish engulfing candle, order block pullback long. So it's the same thing. I just need a little bit more confidence to take that position. And yeah, I think GCAD long is again a risk worth taking because from that area, clearly we're failing to break below. With that said, the moment a 4 hour candle closes below that 4 hour order block, this area no longer is valid. I'll just have to delete it. Session low then gets obliterated. And that counts also if I get a 15-minute candle close below this area, session low is gone. The trade setup is invalid. As soon as there's a break of structure of that session low, the whole thing goes out the window. So it's a very clear plan, to be honest. We need to respect towards the upside, indefinite, and then we need to break above for 100%. Bullish engulfing candle, that's the strategy, or rather, that's my entry criteria. Order block long. So that's what I've got for GCAD. I quite like GCAD. Then would I take a short position? Um, if I get a break of structure towards the downside, then yeah, it's just going to be a simple plan as well. Price was respecting an area towards the upside. We had something like this. We are stepping down from that area, drawn to exaggeration. We'll put this order block like that. And then, of course, if we then break the low, oops, you guys know I love my illustrations. If I break the low, it's a simple process. Where did the low be? Where was the low broken from? Order block selection, just another patient wait for a price to pull back, and off we go. So I would take the short. If we break the low, I would then be expecting price, well, to pull back to where's an area. So that's yeah, that's mitigated. That's not available. So there's nothing in and around these areas. So at the moment, the best position is here for the short position. However, as I've mentioned, if you break the low and then you're able to select an order block that caused it, then of course use it. When price returns, you recognize you're bullish. So when price returns to the highs, just look for something in terms of confirmation, and then you're off to the races. Not like that. You'd want it to stay below that order block. So that's GCAD for me. I like GCAD longs, wouldn't mind the risk. Again, it all depends on what I get in. I'm probably not going to take more than two trades today. I can already kind of feel that. AU, if it materializes, and then I'll make a decision between GU and GCAD. We'll have to have a look to see how the cookie crumbles. We'll have a look at US dollar CAD as well. It's got an amber, so let's have a look to see the reason for the amber. Well, I like the weekly time frame, higher time frame, weekly order block. It's clear to see. I want price to move towards the downside. We have a perfect candlestick formation coming out of that bearish engulfing candle, a new order blocks left behind. So let me actually amend that. It doesn't need to be like that anymore. Um, where are we? We go to 90. From that order block, we then had another weekly order block come out of that area. We've tapped it instantly, but beyond that, we have, of course, excuse me, lower time frame points of interest within. Cool. So the new weekly order block we've got here has now left us with a nice daily order block within there. Let's just see if I could go slightly higher. Nothing, nothing. So here is the first daily order block within the most recent weekly order block just there. Let's put that on. Sorry, I'm all hands. Oh, not all intervals. We want that only. Good. So we can now see the daily order block slightly clearer, refine that daily order block down. We're within the realms of this 4 hour order block just here. Now, let's just double back to the daily time frame. Of course, very bullish of late. However, we recognize why we're getting the move towards the downside because we're now looking to reject the weekly order block. With that said, we still have a bit of range down to the daily 50 MA where we're clearly respecting, clearly. So what I'm looking for on US dollar CAD is a pullback short. If I don't get a pullback short, I might be interested in taking a long position. However, let's talk about it. Why could that be? Let's talk about the short first and foremost. Well, clearly the short formation based on the 4 hour time frame, we were respecting price action, clue break of the EMA, pullback, lower low, lower high, lower low created, order block left behind. So I know it's wishful thinking to understand if price is going to move 60 pips, but it can happen. That's the thought process at the moment. In the immediacy, what we'll have a look at is 15-minute price action to see if there's anything more solid before waiting for a higher time frame point of interest. We can go for 15-minute only. What I do see is a nice Asia range, first and foremost. Well, it's an okay Asia range. You guys already see it. We're looking at a high, potential higher low for the higher high. There is, or should be, an order block. No, it's already uh, mitigated, and that's too high. No, there's no order block there. So the reason why I'm trying to look for an order block is to give me the reason to call that a structure point, because the alternative being that's the move, we're waiting for the pullback for the high. So therefore, we recognize now any short positions could still be a type of an aggressive position, but I want the confluence to suggest that I have waited for a break of structure. So if I start to put these areas in the market as well, I know it's not clear based on price action, but if I just go to the 5 minute, you'll be able to see it a lot clearer in terms of areas where price was being held at, and then we broke below. Don't forget, I've just put this on the 15-minute time frame, and then what we could see is, well, we pushed up from this area. We didn't make a low. We didn't make a new high. We didn't make a new low. Well, we made a new low, but most importantly, an area in the market has now been broken to the downside. So I want that as confluence to support my position to take the short, i.e., to write in my journal that it wasn't an aggressive position because I have waited for a break of structure, of a structure point. So here, at some stage, when price is moving, let's say in that manner where it's difficult to identify clear higher highs and higher lows, it's down to pretty much guesswork as well as your own initiative based on the lower time frames. For example, I just saw that there. I see the rejection, rejection, rejection break. So therefore, it's an area in the market. Head to a lower time frame. Does it make sense? Yes, if it does, it's a structure point. We've now broken structure. Of course, the clear structure point on the 15-minute time frame, undeniably there and undeniably at this higher time frame directional point of interest. However, in order to gain confidence to take a short position, we need some confluence. So, without taking this as a reversal trade, which it would be without confluence, we're now seeking breaks of structure. On the way down, we've identified the 15-minute order blocks that have been mitigated and held, i.e., push to the downside, order block left behind, respected, push to the downside, order block left behind. We respected it, but we didn't tap into it, unfortunately. So now it's the stage that for me to take the only position that I'm willing to take on US dollar CAD is price move up to this area. When the price moves up to this area, what I'll be doing hopefully is Asia range is available. Then I'll be using Asia lows as a confluence to take that short position. The other confluence being, of course, the 4-hour 50 EMA, where price has most recently broken below. The other confluence is the fact that for me to take a higher time frame directional position, which would be my favored long, I have the anticipation that price should then move towards the downside. So that's then supporting me to take the short position in the middle of nowhere based on 15-minute price action only. So that's what I've got. The reason why it's 15-minute price action only is because I can't read, or I can put an order block in here, but it doesn't make any sense. The price hasn't done anything from let's say here, and this is where people get it confused that they're trading higher time frame points of interest just because they put an order block in the market, but that order block is just a 4 hour order block just because the most recent candle is looking to close bearish, leaving us with a 4 hour order block behind. It's not good enough. What we can also say is based on the 4 hour time frame. To be honest, I think that's enough confluence. There's an alert set up at the highs. So that's my setup for today. If price pulls back, I'll be looking for a break of structure on the lower time frames, and I'll be looking to take that short position down if Asia range is available. If Asia range is not available, excuse me, that's the wrong way I've put that. If Asia range is available, then of course I will need to see a lower time frame break of structure, but I will be more restrictive because if Asia range is not available and then we've had a snap in the market, then I'll take an aggressive position here because price is showing me what it wants to do. If we get a break and then price is still available, it will be available up at the highs. I'll take a like 1 minute break of structure, a proper 1 minute break of structure, i.e., high created, respect the 15-minute order block still so we don't close above, break below, lower time frame, order block left behind. I'll look for the short position down. However, for the Asia range, I'll be more restrictive, or probably, yeah, I will be more restrictive. The reason for that is because my decision to be aggressive would be based on a break, i.e., a snap in the market and a pullback. So here's my aggressive play. I can't have two aggressive plays with two different things happening in the market. So if price doesn't break the lows, I can't be aggressive here because that's my play when price does break the low. So therefore, if price comes back up into that area, I'll wait for a bearish engulfing candle, which will of course still give me my lower time frame break of structure, but it's confirmed because we can have a lower time frame 1 minute break of structure within a 15-minute candle that then closes like that. So what I'm saying is I want that 15-minute candle to close, bearish engulfing. That will, of course, solidify this, but also it solidifies as a 15-minute bearish engulfing candle from the area. What then I can do is the same process, but instead of doing it on a 1 minute time frame or a five, I'll do it on a 15, which I'd be a lot happier to rely on 15-minute bearish engulfing candle, 15-minute order block short, more so than a 1 minute break of structure, 1 minute order block short. But I'm waiting for that based on the fact we get a snap of the market first and foremost. So better confirmed setup, more aggressive entry. No confirmation of the setup, i.e., but for what we already have, higher confirmation of the entry. So that's the difference. So that's US dollar CAD. As I said, I don't mind the short. I can understand why we are going to short down to these lows. And it's something that prior, I would say, well, I'm just going to have to wait for price action to come into that lower time frame, or excuse me, higher time frame directional point of interest and look for the position. However, what I'm seeing of late is ways to get in a position before I would have done previously. But with that said, it comes with risk, and when there's risk, we look to mitigate those by coming up with clear plans of execution. Break, good confirmation, lower time frame break, no break of structure, high degree of confirmation, look for the short by way of entry criteria. And of course, down at these lows, I will put an alert. We'll see if we get there. I will just be higher time from directional long position from there. 4 hour order block, refine that. Excuse me, that's actually refined from the daily, which again, bit of guesswork, I must admit, based on the daily 50 MA. Price is respecting it. So of course, if we come back, I'll need to see some confirmation because the order block starts, yes, from higher time frame points of interest, but I'm guessing. I can't lie to you guys. I'm guessing. I don't know if this order block's going to hold. It's in the one leg extension. I don't know if this is the order block or any other order block lower. The caveat being is this is the only order block available before we start to get into the realms of lower, higher time frame weekly order blocks. So it's got reason to be there. We then refine the area down and we look to see, well, has anything happened from that area? Well, of course, we've come down, we've broken structures towards the upside. Therefore, this is the high in the market. I now know that my short position could be what the higher low is being created, which I don't mind to trade the extension. That's the whole point of trading both ways. We recognize when price has made the high, we'll trade the higher low, know when to get out the position, and then look for the higher high back up into those highs. So that's the play at the moment. I don't mind US dollar CAD at all. Not really sure why I've given it an amber, but I think it makes good sense. GJ, nothing, not really prepared to go over that. It's well, as you can see, there's not a lot being done. And UJ, probably going to start getting rid of UJ as well. Based on the fact that probably the most, I'd say, manipulated pairs at the moment, the Japanese yen and the US dollar, it goes without saying. So it's kind of a crazy pair to try and trade. I mean, when it goes with you, you're able to capitalize beautifully, but that seems a bit few and far between. So I hope that makes sense, everyone. AU has apparently dropped to the downside a little bit, but My alert to the upside hasn't gone off, so I'm just going to have to wait patiently to see if we're going to come back up. The reason why I'm not looking to enter that anytime sooner, despite having some good 15-minute candle, is the fact that I've already made this order block larger. We haven't tapped into it, and I know technically that's the order block. So if I wasn't viewing this chart at this time in the morning, then I wouldn't be able to take this position anyway. So I'm just going to have to be patient. This large order block is still in the play. I recognize that my order block, my stop loss is still very small considering this is AU. So I'm just going to wait to see what goes on. If we get a break of these lows, then we'll have a think about it. But I also say, as I said, Asia range to the downside is still available. So if you miss the higher time frame point of interest, then well, you're still going to need that 50-minute order block to be tapped. But what I'm trying to say is a trade is not missed despite it going in my direction. Just yet anyway, it's still early doors. So while I've got a couple of minutes left, what we'll do is go over US 30. Thank you, Denise, for the suggestion. And everyone else, if you do have any suggestions, do send them my way because I'm happy to mark up any chart. And I'll do that as quickly as I possibly can for you guys. I'm seeing down at these lows, there's a weekly order block. Why? Because that order block's caused the most recent shift towards the upside. We have then, of course, broken structure points to the left-hand side. So that, of course, confirms what we can see without it doesn't really need to be illustrated, but you can see we're very much so bullish on the weekly time frame. I'll put the weekly 50 MA in as well for good measure. What we have here, just that weekly 50 MA. What I'm going to do is have a look to the left-hand side to see if we are rejecting anything of previous on the US 30, which is probably unlikely because the US 30, I think it's like that safe haven that just continues to give you good returns over and over again. So any short positions you take on US 30 is pretty much just a pullback because the thing just continues to move towards the upside. What we can then see is an area in the market where price is being held just now by way of daily order block. So we recognize that that is a potential reversal area, i.e. a reversal type of position because we are on the weekly. We're very bullish. We're chucking the daily 50 MA there as well for good measure. Here we are. Okay, so there's a good place to start. Can we then look to refine this area down on the lower time frames? Seems a way away. Right there at the lows, we have that daily order block. That's where we want to be. That's good. We'll put that on all intervals for us to have a good look at as and when it materializes. On the way there, is there anything else? I'm looking at the daily 50 MA. Is there anything else? There was a bullish engulfing candle just, well, not engulfing, but a very nice bullish candle just here, which broke most recent structure points to the upside on the daily time frame. If we have a look at higher highs, or we go higher highs rather, higher lows, higher high breaking structures to the left. So that makes sense. We've got a nice trading range on US 30 at the moment by way of daily order blocks, but still, I think that could be a little bit high, a little bit large, but we'll have a look now on the 4 hour time frame and just double check everything is synced globally. Good. So there's the high that we've got. We're looking to refine that area down. The first order block right there up at the highs based on the 4 hour time frame is just here. So we'll superimpose that on all intervals. And then we'll double check to see, well, what's going on the 4 hour time frame and where is that 4 hour 50 EMA as well. So we're just here like so. 4 hour, where are we? 4 hour EMA. Good stuff. We'll make that slightly larger. Cool. Now we'll have a look at price action to see what's going on. So can we read it? We can say higher high. We've had a low in the market, potentially for the higher high, failed to make a higher high. Then we started to break structure points towards the downside. So let me start putting in some structure areas in the market so we can identify there. So here by my eyeball looks as if there is a structure point which then has been broken. So it do something like that. Previous structure point now broken towards the downside, so we'll call it a break of structure on the 4 hour time frame. And just in case price doesn't want to come back up to those highs, can we look at anything else? So here was an order block. No, it wasn't. Here was behind. No, it wasn't. So nothing there by way of 4 hour. What else do we have down at the lows to create a trading range? Hmm. Okay, can we put that in the market? Where is that coming up? Nothing there. So let's go to the daily again. All intervals to the lows. Let's make that trading range solid. There's a bullish engulfing. Nothing, nothing, nothing. Yes, so there is the order block left behind. Like so. Okay, so it's not a bad trading range at the moment. What I'm needing to do is potentially let's see if there's something more imminent. So we've got that low break, pullback, anything to the left. So I'm going to put this in on the chart and then refine this area down because that makes sense. All intervals. Then we'll go to the 15 where it really matters. Okay, 15 up at the highs. What's price action doing now? Break towards the upside, but this session high is holding. Is there an order block just there as well? No, there's nothing there. So what I have to the lows now, let's have a look to see what's happened just here. Okay, let me zoom out for a quick second, then I'll start to explain it a little bit better. Okay, so we had to wait. That's pretty much what I'd be waiting for. So what we have, let's go big picture. Let's see if I can explain what I've done. Cool. So it goes without saying, extremely bullish on US 30. That's that's pretty fair to say. With that said, we understand what goes up will often look to come down. As I've mentioned previously, US 30, it's pretty much always bullish. Any pullbacks, any short position for me is just going to be a pullback. But nevertheless, we're intraday perspective traders and we can look to trade those pullbacks based on if we get the confidence to do it. So we've had price make that high. We've got an order block by way of bearish engulfing candle or bearish candle, whatever you want to call it. We're then looking to refine this area down right up at the highs, of course, on the 4 hour time frame. That's going to be your best opportunity to look for a short. That goes without saying. However, in the immediacy, what we can say is there were some, if we call it in inverted commas, some structure points in the market. We don't know by way of higher highs and higher lows, but what we can see is a clear area in the market where price was failing to break below. We've then had a break below. So therefore, here's the low in the market. We're looking for that lower high before lower low continuation. That's fair to say. In terms of the invert, in fact, let's stay on the short position for now, so I won't confuse it. Then we look to refine that 4 hour order block down. Here's where we are. So for me, that looks good in terms of waiting for price to return back up to those highs to look for, sorry guys, to look for a short position down on US 30 because in the immediacy, what I can see is we are starting to break structure points to the left-hand side because what I'm seeing is he created the most recent low in the market. So what I would have been looking to do is see if price respect that area. Unfortunately, then that could have been a high followed by a higher low, followed by a higher high, looking for price to come back into this area, which of course would break immediate structure points to this area here. However, there are no other 15-minute order blocks in this leg extension towards the upside. So therefore, it would be a point of interest based on 15-minute only, where I could potentially look for, let's say, a snap and retest type of position, or even an Asia range position towards the upside. So wouldn't mind the Asia range at all. So just to confirm, an Asia range, can I see an area in the market that's broke structure points to the left-hand side? Yes, I can, particularly if this, in fact, let's double check that. Um, that's mitigated. So unfortunately, I'll place it on the chart, but it's not going to be an Asia range. It's already been mitigated. So here's an area in the market where we can say for now a high was potentially created. Therefore, if price comes back down to this area, I'm going to need to see some confirmation because we are going to break structure points to the left-hand side just here before coming back down into those areas. So here's a potential area in the market. However, based on 15-minute only, That's the area. If we were to revert to higher time frame directional trade, then I'm going to have to see price revert back down into this daily order block, unfortunately. Now, with that said, I'm kind of short biased. Despite having that long move, I'm short biased. We recognize that that could be the play in terms of looking for longs, but immediacy, I like the shorts. So we refine that area down. We've got the 4-hour 50 EMA supporting the shorts. We've broken below the first time, looking to retest it. So what I'm looking to see, if we get a nice 4-hour bullish candle pushing into that area, going to check the time and double check, do we have enough time to reject that area in order within that 4-hour time frame to move towards the downside. Let's say now, for example, there's 10 minutes left of the 4-hour candle. I wouldn't be looking to enter immediately. I'd wait for that candle to close. I then have price come up into that area. So this is the 4-hour candle. I then look for the next 4-hour candle to open, which then should push down, break structures toward the upside, excuse me, downside, pull back. Then I'd look for the short back down to the 4-hour 50 MA, which unfortunately, by the time we've closed above, this would now be a target, not a confluence. So that's what I've got at the moment for US 30 shorts based on 50-minute only. So I'm not going to rely on this 15-minute order block because there are many reasons to look for price to actually come slightly lower and take you out. So what I'll be looking to do is just wait for an alert to go off here. Look for a bullish engulfing candle from that area. What do we have? What do we have? Because it's going to break this area here, it's a bit tricky. Bullish engulfing, first and foremost, and then I'll look for another order block to be created. Once price then returns, I'll go 1 minute break of structure from that area and look for a long position. So it's not the end of the world. I quite like US 30 back towards the upside. However, I would much prefer the short from this area. The short, again, probably look for the same type of entry criteria, to be honest. With broken structures towards the downside is a 4-hour order block. Yeah, and that is as aggressive as I'd like to be honest, on US 30. Bearish engulfing candle, 15-minute order block, wait for price to return, lower time frame break of structure, and I'll look for the short. So to be honest, here's probably a little bit too aggressive. Not really trading from any higher time frame point of interest. So I'd probably have to look for something better than that. Price is going to have to come into the area, break structure points, and then come back without tapping into that area or looking for the long. So if I'm going to be aggressive here, I can't be aggressive here, not based on any higher time frame point of interest, unfortunately. So that's what I do for US 30, just looking at it for the first time in a very, very, very long time. What I'm reluctant to do is put this order block in like so because I haven't really done too much. But that could build the bias up just to have us a nice trading range in both directions if you see like that. So if I was to do something like that, then refine the area down, and let me just double check there isn't another 15-minute order block to the left. That's been mitigated. So yeah, I mean it's not too bad. We had an engulfing there, 15-minute order block there, mitigated. We start to move along. 15, no. And we're running into here anyway. Yeah, so I mean, I don't mind it both ways, to be honest. It's just a nice trading range. There's good enough range in both directions, but what I would be more inclined to do is trade alongside this 4-hour time. Well, that's difficult. Trade alongside the 4-hour to the downside because we have range back down to the daily 50 MA where I'm expecting a reaction towards the upside. And then, of course, what we're seeing on the weekly is higher high, potential higher low for the higher high continuation. Let me just put the daily 50 MA on all intervals, and that's just there. So yeah, expecting a pullback. The 4-hour time frame is supporting the pullback, so I'd much prefer the shorts as opposing to the longs. So yeah, that's what I've got. So the longs, I'd need to wait for a break above. The shorts, I'll just wait for a bearish engulfing 15 lower time frame break, and I'll take the short position down. So that's what I've got for US 30 team. Anymore, I'd be a little bit more prepared. I didn't prepare that this morning. I just added the pair. and then just did it live for you guys there. So that's what I've got for the day, everyone. I will keep you all posted throughout the day. That was 34, so we haven't moved too far to the downside. Let's see what happens come London Open. I can already see that structure point on the 1 minute time frame that's created in Asia. So if we get London to open, we break below this, which is my break of structure on the 1 minute. I'll just wait for a 1 minute break of structure here, and I'll take that very, very, very aggressively. I think that's definitely my favorite of the day. AU, just double back in GU. Nothing's really happened. EU. I'll provide a bit more of an update on EU. I recognize I probably skipped that a little bit prematurely because just thinking it's in a range. But I'll have another look at it later. And then GCAD, don't mind GCAD, got a break above, expecting a break below to be honest. But we'll see. US dollar CAD, don't mind either direction, pullback, confirmation, or that higher time frame directional to the upside. Then US 30, why not chuck that into the mix? I like the shorts more than the longs. The longs going to have to prove themselves a little bit more to me because we are now, in my opinion, we are making that lower low, lower high, lower low type of formation. So I need to see a little bit more before I take the long, and I'll be super aggressive when taking the short. That's what I got, team. Boris, I thank you personally for listening to me for over an
No
hour.
problem.
You're welcome, my friend. Take care. Keep me updated if you can. And everyone else, I hope the analysis will help you out this morning. All the best. Take care, and we'll speak tomorrow. I'll definitely later, but certainly tomorrow live. Take care. Bye bye.